Hello Accounting 101 students! In this video, we will go over some of the components of our Chapter 2 handout, which focuses on our financial statements. While you're going through this handout, please look at our student review slides and complete the handout. And also, I recommend looking at our chapter tutorials and videos link in the modules area, especially those instructor videos to assist with our online participation questions. First, we will start by identifying the sections of a classified balance sheet. Some of the accounts that we would include in the current assets section include cash, short-term investments, accounts receivable, notes receivable, supplies, inventory, and prepaid expenses. So all of these items or these accounts relate to assets that we have already converted into cash or can easily convert into cash, or we will use or consume within the short term, meaning less than a year. Then we have long-term assets that we plan to use longer than a year. So our main categories in this area include long-term investments, property, plant, and equipment, as well as intangible assets. We need to add up our current and long-term assets to arrive at our total assets. Then we get to our next category, which will be our current liabilities. So with our current liabilities, we look at how soon we need to pay back that amount that we owe to others. So if we need to pay that amount in less than a year, the amount would be considered a current liability. So in this section, we have notes payable, but just the short-term portion of the notes payable, which means the portion that we have to pay back within a year. Accounts payable, unearned revenue, so that represents cash that we receive in advance from a customer. Salaries and wages payable, interest payable, income tax payable, and accrued expenses. And I know we have a lot of new terms, especially in this chapter. In your study guide, I have a section for students to look up some of the definitions for these terms. In our long-term liabilities, we have the notes payable portion that we have longer than a year to pay, as well as mortgage payable and bonds payable. In our equity section, in this point of our class, we have two main categories. We have our common stock and we have our retained earnings. So next we're going to work on classifying some of our accounts into these categories. You can pause the video and spend some time checking your answers for the classification of each of these items as part of our classified balance sheet. Next, we're going to be computing the ratios to evaluate a company's profitability, liquidity, and solvency. We will first start off with profitability. Profitability measures the income or the operating success of a company for a given period of time. And one of the ways that we assess profitability is through net income. And we learned that net income is revenues minus expenses. Another way that we can assess profitability is through earnings per share. And we're going to go over this formula. To calculate earnings per share, we take the net income and we subtract out preferred dividends if there are any. In your problems, there typically are not going to be any preferred dividends, but later on in the semester, you will see some preferred dividends. Then we're going to divide that by the average number of common shares outstanding. So in this class, you may need to calculate the average by taking the beginning of the year plus the end of the year amount, add them together, and divide by 2. So in some of your calculations, you will need to also compute the average. Next, we're going to be talking about liquidity ratios. And liquidity measures the short-term ability of a company to pay its current obligations. So for the liquidity ratios, we're mainly going to be looking at the balance sheet. For working capital, we're going to be taking our current assets and subtracting out our current liabilities. And that's one of the reasons why we prepare our classified balance sheet, because it's easy for us to see the current assets amount and the current liabilities amount. And we want to make sure that our current assets exceed our current liabilities. And for the current ratio, we would take the same current assets, and now we're going to divide by our current liabilities because we're looking at these ratios as a proportion. Another category of ratios that we have are solvency ratios. And solvency ratios measure the ability of a company to survive over a long period of time. So for solvency, we look at our total debt and we divide that by our total assets. And companies want to have less debt in proportion to their total assets. So for this particular ratio, a lower number is better. Next, we have our free cash flow. And we're going to go over the components of the free cash flow formula, which you will find most of the numbers in our statement of cash flows. For free cash flow, we take our net cash provided by operating activities, subtract out our capital expenditures, which refers to the purchase of property, plant, and equipment, and then we subtract out our cash dividends. And now we're going to apply this with some of our ratios, with the data given in the problem below. In this problem, we are given data for 2 competitors, and we want to compare their profitability, liquidity, and solvency by comparing the ratio calculations. So we're going to go ahead and get started with the net income calculation for Company A and Company B, as well as the EPS calculation for both of these companies. We compute our net income by taking the net sales minus the expenses for each of these companies. And we see that Company A has net income of $248,000 versus Company B that has net income of $142,200. So Company A is more profitable than Company B based on the measurement of net income. For earnings per share, we take our net income that we already computed. We see this problem does not have any preferred dividends, and we're going to divide our net income divided by the weighted average number of shares outstanding of 80,000 that is given in this problem. So our earnings per share for Company A is $3.10, and our earnings per share for Company B is $2.84. So Company A has higher profitability based on a higher net income. One of the things that's important to note is that earnings per share is not a good measure for 2 different companies because the average number of shares may vary significantly from company to company. Next, we're going to assess liquidity by computing the working capital and current ratio for both companies. For working capital, we take our current assets and we subtract out our current liabilities. We see that our working capital is higher for company A compared to company B. For the current ratio, we take the same dollar amounts, but this time we're looking at the current assets as a proportion of our current liabilities. So a higher number is better for the current ratio. So overall, company A has better liquidity compared to company B due to a higher working capital and a higher current ratio. For the debt to assets ratio, we first need to compute our total liabilities by adding together our current liabilities and our long-term liabilities. Then we need to compute our total assets by adding the current assets and the long-term assets. So in this example, those represent the plant assets. So when you do the calculation, you're going to take your total liabilities and divide it by the total assets. And one of the key things that you want to notice with the debt to assets calculation is that it is better for a company to have less debt compared to their assets. So in this particular ratio, a lower number is better. And with this calculation, company A has better solvency than company B. For free cash flow, we take our net cash provided by operating activities, subtract out our capital expenditures, and our dividends paid on common stock. So we can see that our free cash flow for company A is $12,000 versus company B is $1,000. Based on our measures of a lower debt to assets ratio and a higher free cash flow, company A has better solvency than company B. The next part of our handout includes the financial reporting concepts that are covered in our textbook, interactive tutorials, and student review slides. Please go through each of these principles and assumptions and identify the description that most closely matches. I have included the answers here for you to check your work. So if you want to pause and check your answers, please also take the time to watch my instructor videos to assist with the online participation exercises. And I highly recommend attempting all of the questions in our online participation. Please reach out if you have any questions. Happy studying!